Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
A green-looking screen across the Asia-Pacific, every single benchmark index trading with gains.
Still got one interview left, so I don't think it would be prudent to give any hint.
The 20-day moving average, which is 25,847, 25,840 on the Nifty. You got the Nifty Bank, which is up about 0.25%.
Been positive on IT services for the last 3 months or so.
Gave the guidance of 15%. We should be growing at around 17-18%.
We've seen Nifty staying on those levels at which it started, 231 points higher on the Nifty as we speak.
Steel Secretary, he said that he expects demand to grow at around 8 to 10% ballpark going forward.
Few stocks that are trading in the red today, and that is Bharti Airtel.
It's almost a 300-point uptick on the Nifty as we speak. We are above that 26,150 mark comfortably.
Okay, well, it takes one day, right? And you're almost counting down to the number of points you're away from all-time high levels for the Nifty. And that is basically the dichotomy in the market. It's basically been prefaced with every question we've asked over the last 2-3 days. Markets near all-time highs, but the broader market does not feeling or rather giving you that same kind of positive sentiment out there. I'm not sure if today is either. With the kind of stocks which are going up, which I'll get to in just a bit. This is Closing Bell coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Surabhi and Reema here in the studios. Nigel is joining us from the newsroom floor. Guys, afternoon.
Hi, good afternoon, guys. I really don't know if anyone has any complaints because what Prashant was saying that, yes, broader market's underperforming. One day was the Bank Nifty underperforming. But none of that. It's very well-rounded, lots of participation, and it's up and away for now.
We're getting quite the lift from the global markets. So Asia closed up with a gain of about 2%. Europe is up about 0.5%. Even the Dow futures, after adding about 650 points yesterday, the Dow futures is up 100 points. And plus, even the geopolitically, crude prices have come down. So you've got that macro tailwind. Let's see if there is any progress between Russia and Ukraine. So all that on the sidelines is also, adding. And Nigel, today, all your, heavy hitters, HDFC Bank, Reliance Industries, ICICI Bank, all contributing.
Yeah, that's right. The boys are looking good, actually. The big hitters coming in there. I wish in the test match as well, all our boys did well. Unfortunately, we go down 2-0, but let's ignore that. Let's focus on the markets. No cricket today. But it appears, I think, one thing that I've been saying both on Bazaar and Closing Bell, that November is when we hit all-time highs, even when we were at 25,500. We're there, this week itself. So, pretty okay. But the breadth of the market, that's the point. Even on days when we were ending in the green, the breadth of the market was negative. Today, that's good. So it's a good start to the December series. And hopefully, Santa comes to town for the Bulls.
Santa comes to town. And will not very far away, right? So we'll see and track that one. All the sectors are up on your screen. And there's a nice rounded 1%, 1.25% kind of gain across the board. Let me just quickly run you through what's coming up here in terms of the show. So, of course, bullish global cues and some peace talk, some chatter at least around Russia, Ukraine. The Nifty, of course, near all-time highs. It's been around all-time highs for a while. All sectors in green. Tata Motors passenger vehicle, new launch there, Sierra. We'll tell you how that fills a critical gap in the company's portfolio. And, of course, some management commentary there as well. Steel is looking up. We had the Steel Secretary yesterday, and we've, of course, been telling you key takeaways from that. So, market expectations perhaps now rising after that interview that there perhaps will be the protection which will be which will come back again shortly. Now, a rare earth magnet manufacturing scheme could be in the works. So, apparently it's going to come up before the cabinet, and our colleague from CNBC Awaz will join us in just a bit. And the other one, of course, is what happens to oil companies and, refiners. Chennai Petro is down 12%. MRPL is taking a bit of a knock. It's a big what if the Russia-Ukraine situation cools down, ceasefire, temporary, whatever, we'll see. But, that's another one which Sonal will address in a bit. How should you position yourself in the last hour? Mitesh is with us with that. Mitesh, take it away. What would you do?
All right, Prashant. So I think, very clearly the market remains extremely positive, and we are close to the earlier highs. So, today I was saying that in case you get a dip to about 25,800, 850, that's the buying opportunity. We got this 25,842, but I never expected the market to rebound so strongly and nearly 300 points up. So that's a positive sign. So trade with long buys. Only on the index, because you're close to the earlier highs, you may not want to take a fresh position right now. If you're not taken in the morning, which a lot of us also missed, I think then you've missed this index trade. But on the stock side, I have a buy on Bajaj Auto with a stop at 91.34 for targets of 92.50, and Manappuram is a buy with a stop at 282.5 and a target of 290.
We'll come back to you, Mitesh. For now, let's get to a big story that we've picked up from CNBC Awaaz. Lakshman, in fact, has source-based information about how the government is working towards rare earth magnet manufacturing scheme. Lakshman, what are the details?
जी दरअसल आज कैबिनेट की बैठक हो रही है। जो मुझे सोर्सेज से जानकारी मिली है उसके मुताबिक गवर्नमेंट रेयर अर्थ परमानेंट मैग्नेट के लिए एक खास स्कीम को मंजूरी दे सकती है। ये स्कीम दरअसल ये प्रोडक्शन लिंक्ड इंसेंटिव के लाइन पे होगा, जैसे अलग अलग सेक्टर के लिए सरकार ने इंट्रोड्यूस किया है। तो रेयर अर्थ परमानेंट मैग्नेट के डोमेस्टिक प्रोडक्शन को बढ़ाने के लिए प्रोडक्शन लिंक्ड इंसेंटिव स्कीम के प्रपोजल को कैबिनेट आज मंजूरी देगी, इसकी संभावना है। ये स्कीम 7 ईयर्स के लिए होगी और इसमें 7,300 करोड़ रुपए का आउटले किया गया है। और इस स्कीम के तहत रेयर अर्थ मैग्नेट की माइनिंग से लेकर के उसकी रिफाइनिंग तक, उसके प्रोसेसिंग तक और इसको मेटल ऑयल में एलॉय में चेंज करने तक की पूरी प्रक्रिया इसमें शामिल होगी। जो कंपनी इस प्रोसेस में शामिल होगी, अपना प्रोडक्शन बढ़ाएंगी, वैल्यू एडिशन करेंगी, उनको इंसेंटिव स्कीम का फायदा दिया जाएगा। और ये बता दूं कि गवर्नमेंट का टारगेट ये है कि इस रेयर अर्थ मैग्नेट के डोमेस्टिक प्रोडक्शन को सालाना ईयरली 6,000 टन पर ईयर तक पहुंचाना है, उस कैपेसिटी को जनरेट करना है। तो उसके हिसाब से गवर्नमेंट ने इस स्कीम को तैयार किया है और पूरी कोशिश ये है कि चाइना से इंपोर्ट पर डिपेंडेंसी कम किया जाए। बता दूं कि 60% रेयर अर्थ का पूरे ग्लोबल में माइनिंग चाइना अकेले करता है और 90% रिफाइनिंग चाइना अकेले करता है। और जब अप्रैल में चाइना ने इस पर कुछ रिस्ट्रिक्शंस लगाए थे तो डोमेस्टिक इंडस्ट्री को काफी ज्यादा परेशानी हुई थी। उसके बाद सरकार ने इस स्कीम को तैयार किया और आज कैबिनेट से मंजूरी मिलने की संभावना है।
Thank you, Lakshman Ji. So big manufacturing push likely to come from the cabinet as it meets later today to turn India from a rare earth magnet importer to become a fully self-reliant producer. Sudeep Bandyopadhyay is now joining in. Sudeep, you can see some of these stocks like a GMTC. That's the one where you can see the biggest impact. That's up close to about 7%. But any play on EVs, electronic manufacturers, or a GMDC, renewables, defense, all those which depend on rare earth, because now this, we are going to strategically own this, important resource eventually.
Well, GMDC definitely, has got, to benefit if once the scheme which government is expected to announce is introduced. Apart from GMDC, there may be some other beneficiaries, smaller beneficiaries, and somebody new also may come in. But as things stand today, from the mining perspective, GMDC should benefit. You talked about the EVs, EV players, and other users of rare earth. Of course, if they are not dependent on China or any external sources for rare earth, and they can source it locally, definitely that brings certain amount of certainty to their business. Why go very far? All the biggies in the automobile industry, two-wheelers, whether it's a Bajaj or a TVS, all of them, Ather, all of them does benefit in a big way, because without rare earths, their production of EVs will stop, and we definitely don't want that scenario. So this is a very timely intervention. Only we can wish that it had happened earlier, but nonetheless, it's a good development.
It's actually a good day for metals overall. I mean, now these stocks are quite excited because of the news that Lakshman just shared with us, that perhaps more incentives for those who are going to be looking at mining rare earths. But even otherwise, good afternoon, Sudeep. Great to have you. And even otherwise, I mean, look at metal stocks overall. They were doing very well. Steel has been a big story, and I'm sure you followed that. We've been tracking it since yesterday. And, Nigel's been telling us that it's confirmed now. The secretary himself is saying that there could be some sort of an additional, protectionist measure, maybe, safeguard duty in another form that could be coming soon. And plus, global markets are feeling good. So, in metals, apart from rare earth and maybe GMDC being a play, anything else you're buying afresh in metals, Sudeep?
Well, I think the entire steel sector is definitely excited. There was a confusion when the earlier policy expired on 6th November, and today we are operating in a vacuum kind of a scenario. Hope this clarification by the steel secretary was very timely and useful, and I think the steel industry is breathing a sigh of relief. So yeah, I think one can definitely look at JSW Steel. We do like it. We also like Tata Steel. From a long-term perspective, both of them look good. And I think if the duty gets in place for a slightly longer period of time instead of just a 1 year kind of, if it's a 3 year kind of a term, I think it will be much more reassuring. That's what I would say. Overall, in the metal space, we do like the Vedanta for quite some time for multiple reasons, and we continue to maintain our view of that.
All right, just one point, guys. Since we're tracking GMDC, just requesting our director to pull up a 3-1 chart of GMDC. The stock in early October, if I remember correctly, it was at around 650 rupees. That stock corrected in a matter of 45 days to around 480 rupees just yesterday. And now, in fact, it's bouncing back. So yes, that rare earth opportunity will be there. It will not be seen in 26, 27, and possibly even 28. It's a story 3 years down the line, and the core lignite business has been struggling. So just keep that in mind. There's a tailwind out there with regard to rare earth, but keep in mind that, in fact, it will not come in the next 2 to around 3 years as well. And the core lignite business is struggling a little bit. Just want to make that limited point, guys, with regard to GMDC. It's not a stock for the faint-hearted. It's a stock that moves around very, very violently, and it had corrected a smooth 20% very, very quietly in, I think, 25-30 sessions on. So just thought I'll put that on board.
A point we cannot forget, Nigel, glad you brought that on the table, because when the rare earth crisis started and then there were some news reports indicating that maybe GMDC is going to be, coming out with a bigger plan on this front, the stock did rally. That's 3 months. Let's pull up the 1 year chart once again on GMDC. It'll illustrate the point that Nigel is making. Extremely volatile stock and very sensitive to all kinds of news flow. And from the peak, it's down about 20-25%. So that is GMDC, the rare earth story, and metals in general, which have been doing very well today. Let's move on to something else. Tata Motors passenger vehicles. Now, the stock last time I checked was up 1%. It opened the morning substantially firm, almost 2.5% higher. And there is a great anticipation around Tata Motors now. Let's pull up a longer term chart. One of the worst performers of the year. Stock's been down almost 50%. And now comes the launch of Tata Sierra. Auto enthusiasts would know this is no strange name. I mean, an epic SUV is making a comeback, which is making the market sit up and take note. Yeah, those are the visuals from the launch that took place yesterday in a market that is absolutely tilted towards SUVs. Will this mid-segment SUV really turn around the fortunes of Tata Motors' domestic business? Let's put that question to Sudarshan. I'm sure he's been thinking only this over the last 48 hours. So I'm sure you've done the analysis, spoken to people, spoken to analysts. What's the verdict?
It's a big launch for Tata Motors passenger vehicle, and that to Sierra. It's a known name. Even in the older version, we had Sierra. Now it's reborn. And if you talk about all the SUVs that Tata Motors passenger vehicles PV has, it's the one which has the maximum number of features. Now introductory price is 11.49. That is looking aggressive, and even like it's attractive as well. What about the bookings? It will start from December of 16, and deliveries are expected to start from January mid, that is January 15. While most of the brokerages remain cautious on the stock, but they have a very positive views as far as Sierra goes. So Nomura has written a note on the stock. It maintains neutral rating. Target price is 395 per share. But it says this car carries forward the Sierra design into a modern avatar. Even pricing is aggressive, and even given the base variants are too feature loaded, and now they are expecting this Sierra to have bookings of at least 10,000 units per month, and it seems well positioned to benefit from the consumer shift that we have been seeing over the last few years, that most of the consumers are now have a preference towards SUV. And now this could create a meaningful upside for PV growth expectations we have from Tata Motors passenger vehicles over FY 26-28. Overall, it's looking very good for Tata Motors passenger vehicle. For a standalone business, it can be a big booster, but everyone knows that JLR is still struggling. That's the reason. That's one of the main reasons why all the brokerages remain cautious on the stock. If you take a look in 2025, it's the biggest underperformer, down more than 51%. But today, on the back of this launch, it's trading higher, up around 2%.
So tomorrow we'll talk to you about another SUV. I'm telling you from now itself. And you know which one I'm coming to, right? It's the battle of the SUVs because the M&M flagship XUV 700, the EV version launches tomorrow. Is hotter than ever. So you be ready. SUV conversation is not over. But for the timing, let's hear out Mr. Shailesh Chandra, CEO and Managing Director of Tata Motors, who says that the company is eyeing a double-digit growth this fiscal year and is expecting the SUV market share to touch 22 to 25%. So Tata Motors, Mahindra & Mahindra, exciting times. Hear out the Tata Motors management.
Today we would be in SUV segment about 16-17% market share. We hope that with Sierra, our market share in SUV segment can go up to 20% plus, say 20 to 25%, anywhere between that. November, we see that the growth might be double-digit growth. So 3 months we have seen post GST that the growth rates have been in double-digit, and therefore I hope that the sentiment continues going forward. FY26, I can only say that we are definitely eyeing a double-digit growth. But in the first half, our growth rates were not that great. But in Q2, if you see, we were 10% growth. But in second half, we expect that we will be able to garner double-digit growth.
Okay, that's Tata Motors PV. That's an ambitious-sounding management and big plans for the car ahead for the Sierra. Let's just do a contrast. Tata Motors PV in the last 1 year is down 50%. M&M in the last 1 year is up about 23-24%.
Tata Motors too, because it got demerged, right, into passenger vehicles and CV.
Yeah,
so when passenger vehicles listed, it was about, I think, 363 around that price. So I'm not sure if it's down.
Yeah, it's not.
It's not down.
It's not down 50%. Yeah. I mean, the adjusted though, but this business, I guess, is been
it's
flat.
It's not done. It's underperformed, and it's not done too much because of the JLR issue.
Overall, I mean, the stock, even in its earlier combined avatar, did not really return value for shareholders this year. M&M did. Now, can that change? Because now you can do a pure play PV play with Tata Motors if that's what you choose to do. And then there's Mahindra & Mahindra, which has been the leader for many, many years. So, Deep, that question to you, Tata Motors PV or M&M? If you want to buy something fresh, which stock will it be?
Well, it will be definitely M&M. And we have been recommending M&M for the last almost 2 years now. And we have been proven right, and we continue to maintain our view on M&M. I think there are multiple growth levers in M&M. Whether it's the SUV business, the tractor business, which has started doing very well. And I think with the rural income increasing, I think the potential is significant. Their EV segment also has started really performing and outperforming. So I think absolutely no doubt. Whereas as far as Tata Motors PV is concerned, I think, of course, this launch is very interesting. We'll have to see what kind of numbers they get. And they definitely needed some of these kind of excitement and fresh launches. But the problem will be JLR, because there is too much of pressure on JLR, both in China as well as Europe. And I think, things are not looking good at this stage. As far as the overall Tata Motors passenger vehicle consolidated revenue, margin, profitability, none of these parameters are looking good at this stage. So we will be definitely cautious.
Okay, all right. Sudeep, wanted your take on refiners. And Chennai Petro is a stock that we're looking at. A couple of refineries under considerable pressure today, likes of CPCL, MRPL. Sonal joins us to help us out, to give us a sense about this fall today. Sonal?
MRPL, these stand, they are in focus today. Both of them down considerably, anywhere between 4 to 10%. But do remember, these stocks have seen a big up move as well. In last 3 months itself, MRPL is up 51%, Chennai Petro is up 67%, and this is on the back of good Q2 performance that both these companies reported. Now, this is because of stronger refining margins that came by in the quarter gone by, and this is something which continued till last week as well. In fact, Chennai Petro did indicate in Q2 that cracks have improved from Q1 1 to quarter 2, and this is something which has continued in quarter 3 as well, and they were running at 114% capacity utilization in the quarter gone by. Do remember, Singapore GRMs, they've almost doubled in last 1 month to levels of $13 per barrel. But there were some commentaries which came by. In fact, we spoke to G Shipping yesterday, and they indicated that strong refining margins are keeping tanker demand upbeat. So right now they're seeing diesel margins or cracks anywhere between $30 to $35 per barrel, sometimes reaching levels of $40 per barrel as well. But if Russian supply re-enters Europe, if there's a ceasefire and Russia is allowed to supply to the world, and especially Europe, these margins would come down, because right now they are at unsustainably high levels and they are expected to come down substantially. So yes, there is a fear that margins would come down, and also these stocks have already run up so much, right? And if we look at the valuations, MRPL trades at 12.8 times FY27 EPS, Chennai Petro trades at 23 times FY27 EPS. So maybe they are factoring in a lot of up move from here on, but there is a fear of margins coming down.
All right, thanks a lot for that, Sonal. Sudeep, what do you make of them? As Sonal said, there's a risk now. There's been a big party. Refining margins had spiked up big time. But now there's a risk to that. What would you do?
Absolutely, Nigel. I think the party is probably going to get over. The noise we are hearing from the global media, Ukraine, Russia, there is some kind of a ceasefire, which is, I believe, likely very soon. And if that happens, and one of the main conditions of the ceasefire from Russia's side is allowing them to sell their petroleum and gas. So I think once Russian supply enters the market, margins will come down significantly. And I think we will be back to where we were 3-4 years back, pre-22 situation. So we have to be careful. And look, the valuations wise, I think they are richly valued if you consider the possibility of margin coming down. And I'll be very, very careful touching these stocks at this stage.
Sudeep, thank you very much for joining in. Market's still going strong, up 300 points in the Nifty. We'll get into a break. On the other side, Ronak Onkar of PPFAS Mutual Fund will join in. Stay tuned.
Welcome back. You're with us on Closing Bell. And as always, it's that time of the show where Hormuz joins in with some of the interesting buzzers, the movers and the shakers. And today the whole market is moving, Hormuz. So I'm sure you have plenty of exciting names on your list.
Well, in an era of WhatsApp, we start off with a stock that starts with a name called SMS. So that's the kind of stocks that are moving today, everything that's moving in the market. SMS Pharma, of course, it's a news flow related move today. Is 18% higher now on the stock. The biggest single day gain since June of 2020. The volumes are the highest in 3 months as well. We have had more than 1 crore shares that have been traded on the stock. The 20-day average of just around 5 lakh shares. It's also convincingly moved above its 50-day moving average of 281. And it's the 4th straight month of positive returns for the stock. It's had a good year so far, up around 35% on a year-to-date basis. Responsive Industries is the other one on the list today. Snapped an 8-day losing streak on this 15% up move, the biggest single-day gain since January of last year. The volumes here saw a very sharp spike after noon, and since then the volumes currently are the highest since February of this year. At 26 lakh shares that have been traded on Responsive Industries today. The 20-day average is just close to 1.5 lakh and moved above all of its key moving averages, but has remained an underperformer this year, still down 11% on a year-to-date basis. Natco Pharma has made a very big move on the upside today. The stock is up almost 10%, has extended its gains now 11%. It snapped a 3-day losing streak, the biggest single-day gain since February of last year. Volumes are the highest since April of this year. They had close to 1.5 crore shares that have been traded on Natco Pharma today. The 20-day average is just over 8 lakh shares. So gains on very strong volumes on Natco Pharma. The stock has moved above its 100 and its 200-day moving average as well. But it's been a big underperformer this year, still down by 1/3 in 2025 despite this 10% up move. And lastly, Sonal just spoke about Chennai Petro on the downside. The biggest single day fall since July of last year. Has declined in 3 out of the last 4 sessions. But as the way the stocks have moved on the upside on very strong volumes, Chennai Petro's fall is not on very strong volumes. 60 lakh shares have been traded. The 20-day average is also 60 lakh shares. So it's not something that the fall has had been on very strong volumes. The 50-day MA on the downside is now at 860, still a while away from there, but it's had a pretty good year so far. Despite this fall, still up 44% on a year-to-date basis is Chennai Petro.
Okay, all right, Hormuz, thanks very much for that. Actually, many of these names, right, especially in the upside, I'm just looking at, it's a 300-point up kind of a market. But first of all, on the Nifty, if you look at it, it's kind of very dispersed. You've got lots of, very few things are down. Maybe that is something you can say clearly for the market. But in terms of what is up, it's 1.25, 2. JSW Steel is the biggest gainer with about 3.5% gains. Now you look at the broader market, right, and just the kind of names, and it's not a very long list of big volume-led gainers, but it's an unusual list. Names like Optimus, you got Sandhar, Goldium, Jamna Auto, Black Box is up 5%, JTL Industries, Responsive Industries, Best Agro, Ganesh Ecosphere, which is completely bombed out from the highs, Tourism Finance Corporation, PG Electroplast, Reliance Power, SMS Pharma, Hormuz mentioned. So it's not the usual more well-owned part of the market. I thought I'd just quickly mention that. So yeah, I mean, but if you look at if you track the index and where it is, of course, we are tracking the number of points it is away on that live tracker from all-time high levels. Ronak Onkar is with us, Head of Research and Fund Manager at PPFAS Mutual Fund. PPFAS, of course, had their Unit Holders Day on the 22nd. Ronak, good afternoon. Good to have you with us here. I want to start with, of course, the big one, which is you're launching a new fund, large cap fund, right?
Yes.
So talk to us a little bit about the reasoning behind it, because you're sitting on a lot of cash and you already have a fund which you can sort of, you can deploy in that fund. So what's the need for a new one?
Prashant, thank you for inviting me. So definitely, if you have seen the video on Saturday of our AGM, we described that this fund is actually completely unlike our FlexiCap fund. The FlexiCap fund is a very dynamically managed active fund, which has a global exposure, and we will take a lot of active share in stocks that we care about. and we want to invest in. Whereas the large cap fund's purpose and the end investor who it's targeting is very, very different. It is somebody who needs to have a broader exposure to at least the top 100 companies that we have in the market. And what the passive funds cannot do is basically maintain a little bit of an active share or tactically execute based on merger arbitrages or even cash to future calls that we can take, then that active fund can do. So it will be very close to the Nifty 100 index that we are choosing, and it gives you the market return with a little bit of execution benefit that we can provide to the investor.
Got that. You know, in the flexi fund as well, you will have. So that is purely Nifty 100 focused, basically. That's the primary difference.
The large cap 100 is benchmarked to Nifty 100, whereas the flexi cap has a very wide mandate. It can basically become a large cap, slightly large cap heavy fund, can also have more mid cap, small cap if the valuations change. And of course, it has a little bit of the international flavor as well.
I read that one other headline, which is PPFA's IPO, but a few years down the line, right? Was that a question, or was that an answer to the question, or was that a statement yourself? You guys made yourself?
So we get asked this question every year, and Mr. Neil Parekh, who is from the promoter family, has the same answer that every few years we might reconsider having an IPO. So he just gave a statement that maybe in the next 5 years we might consider, but it's maybe, we don't know.
You all also announced, I think, some global funds, 2 new passive outbound funds where you can track NASDAQ 100 and the S&P 500. Now, what's the view that you're taking on global equities, US markets in particular, after the kind of run-up that we've seen? So if someone invests whenever you launch in this, what is the kind of return they should expect?
So in fact, those funds which you mentioned are part of our Gift City operation, which is handled by a separate team. So I'll just be brief. We have one active PMS over there, and these are new funds we are launching, which will track the broader indices of S&P 500 and NASDAQ 100. I don't have too much more detail to reveal, but they are basically index tracking funds for people who want to invest globally and into an index fund.
Got that. Okay, so in your flexi cap fund, we always talk to you about your tech holding. You've got an Alphabet and some others. Now, up until now, NVIDIA, OpenAI, these were seen as the undisputed AI winners. And then came Google, Gemini 3, and that seems to be flipping the narrative or the leaderboard. Now, you all own Alphabet. How do you see the AI battle brewing?
It's very hard to predict because things are changing quite dramatically. If you see every 6 months, you have somebody new on the leaderboard at the top. So I would rather look at it from a point of view of cash flows. So if you look at the companies we own, we have Alphabet, we have Amazon, we have Meta platforms, and we have Microsoft. All 4 of these companies are exposed to various segments of the tech industry, which is one is digital advertising, some is software, some is cloud computing. So all of these generate a lot of cash flows, which are then redeployed in creating the AI infrastructure or even building the models. So out of all of these 4, I think Google is the only one which has the entire stack, right from the hardware for AI infrastructure, then they have the model themselves, and then they have the user base or even the software layer where they can offer it as a service and people can pay for it as a paid subscription. So that is very unique for Google. So Google has been in a portfolio since the inception of the fund. We like that business and it has been growing very well over a period of time. But within the AI stack, I don't want to call leaders just yet, but I think every company has the advantages, and Google, I think, is right now looking like the most advantaged of them all.
NVIDIA is missing from
I was going to ask him. So you didn't, NVIDIA never was there. Was it because it was never making the valuation cut for you? Or was there some other thought to it?
It was always that case. Every time the valuation looked a little expensive, but one has to be a little imaginative, which I was not as a tech analyst in the firm. And the earnings growth was far higher than I anticipated. We missed the stock, basically.
Oh, okay. Happens to the best, I guess. But anyway, otherwise you've done phenomenally well. From the few fund managers who managed to get onto the US tech bandwagon in a very sustained way, well ahead of the time. But just to come back to this large cap offering now that you all are thinking of, and I believe that I read somewhere that the return expectations should be slightly better than the index. I think the underlying for it is going to be the Nifty 100, if I'm not mistaken.
Yes.
With a cost structure that will be similar to passive, not as cheap as passive, but similar. So what is the thought process here, Ronak? Do you see a lot of value in that space, in the large cap space? Some argue that valuations at 22 times are not exactly cheap for the Indian market. So just walk us through it. Why are you looking at a large cap offering, which will be slightly better than a passive fund, linked to the same index.
Agreed. So if you see our fund house, we have limited fund offerings, and based on what we think is the most demanded by our investors and what we think can add a little differentiation is when we decide to launch a new scheme. And this is where the large cap scheme came into picture. That's a category we did not have a fund in. And over here, we saw that there's a demand from our investors over many years that why don't you launch an ETF or passive fund? But we realized that the economics for a passive fund and even the kind of way the passive funds operate, where they have to be fully deployed in the way the index is there and the restructuring has to be followed at a regiment, we didn't like that kind of a restricted way of approaching a passive fund. So we thought, can we do a better way? Can we have a fund which basically tracks the index and little bit efficiencies we can provide by doing right execution, by providing merger arbitrage. So for example, in the past in the FlexiCap fund, we did this. When HDFC bank was merging, we in fact bought HDFC Limited so that we got the arbitrage benefit. A little bit benefit we can win here and there, and I think that will make the differentiation. But broadly, the returns should track the Nifty 100 index. And it's for an investor who does not want to have too much of an active management in their portfolio. Can they have a low-cost equity exposure through a slightly passive strategy? This is what we're trying to achieve. So it's a different investor, not the FlexiCap investor. It's an investor who does not generally invest in equity and wants to start exposure through something like this.
All right. Hi, Ronak. Good afternoon. Good to see you. And Ronak, I need to ask you about two stocks, which are out of flavor, at least as of now. We've been talking about exchanges, the unlisted NSE 4-5 lakh crore. You have the BSE at 1.2 lakh crore. MCX as well, is run away. But you have IEX that's around 13,000 crores of market capitalization. You all have been loading for the last few quarters out there. So give us the top rationale out there with regard to IEX. Why do you all like it? And what are your expectations? Because this market coupling had spooked the street, but you'll continue to add on. Tell us more.
So Nigel, if you see IEX position, we only added when the latest news flow cracked the stock price. And what we realized is that although the intention is great in order to have a diversified ecosystem for exchange traded power contracts, but unfortunately, IEX right now has the highest market share, and it is basically the buyers and sellers are both used to coming to that platform and discovering price on that platform. So if the market coupling comes in, we would actually like to see how market coupling really affects a market share of an incumbent who has such strong network effects already. Again, it's not proven. So it's basically a probabilistic bet. We will see if over a period of time, IEX is able to retain market share, provided same value that it has been providing to all its buyers and sellers transacting there. And secondly, we look at slightly longer term period, where if you want to scale up renewable power within our ecosystem of power demand and supply, I think over a period of time, exchange-driven power transactions are going to be a larger volume of the market. And that is the intention of the regulator as well. So that's been the trend over a period of time. And I think longer term, there is a lot of volume for all the players to enjoy. So I did not see too much of a problem when the IEX price cracked and the market coupling was announced. Until there is an execution and actually we see the evidence that market share will erode for IEX, we will see how the stock performs over a period of time. But from the business point of view, so far, not much has changed for IEX.
Okay, all right. We'll leave it there. Thank you very much for joining us and Ronak and sharing all that with us. Appreciate it. Well, I think you got the market, which is, right there, near highs. Some mid caps are at the bottom of the screen, things like Saman Capital, etc., which are up about 3.5%. We'll take a quick commercial break here. We'll come back and get you a quick sense of what's happening in dealing rooms. Nimesh joins us for that. D Street Chatter and some technical trading ideas follow after that. Stay tuned.
Welcome back. Well, the markets, it's a bazooka start actually for the December series. 300 points in the Nifty, 700 points on the Nifty Bank. But that's not the story. The story is in the broader markets. Advancing stocks, 3:1. Nimesh joins us to help us out with what he's picking up. Nimesh, after a while, the breadth of the market is looking good. It's at least feeling like Christmas as well as, portfolios are feeling better.
Well, Nigel, I think it's too early to call a Christmas rally, honestly. So there were initial signs of some bit of uptake in the broader markets, which I highlighted yesterday as well. And today it's followed up. But again, I guess it's a early start. I don't think we can call it as a trend as we speak. But yeah, it's a good relief, and it's just come as a bit of a surprise to most of the traders and investors. Nobody thought of a 300-point rally on day one of the new series. The index is up almost 1%. I guess the big directional move seems to be in the financials, and that's the space which is relatively outperforming on a daily basis. Whether it's NBFCs, private banks, or PSU banks, that's one space which is outperforming, and it's backed by institutional flows as well. So that's clearly standing out. I guess from a technical point of view, we are about that level, but on a closing basis, 26,120 is a level to watch. If that gets taken out, which looks like it will be a day-to-day, you might see further short covering rally, because even at the start of the new series, the FIs are net short almost 85% on the option side. So that's something to watch out for. I guess with today's move, the P series is now back to the upper end of the channel of 1.5, 1.4 at 1.5. Typically around 1.6, we see profit booking as well. So keep that in mind. But as I said, this is just a trailer. I would say don't read too much into it. And of course, there is still no clarity on when the US deal will happen, or if indeed it will happen in the very near future. About the broader markets, Nigel, again, to me, it looks like more of a technical pullback. All the stocks were extremely oversold, and there is really no participation. Even in today's pullback, if you ask anybody, have they bought anything, the answer is no. So it's just a relief rally, and people are happy that, okay, my stocks have come up a bit, but not that there is big momentum or a chase from retail or HNI investors in the broader markets as well.
Okay, all right, got that point. And maybe it's at times like this, when there is not too much participation, even on the upside, suddenly there's a left-out feeling, which could result in an additional fill-up upwards as well. Let's see how that plays out. But individual stocks, what are you picking up?
Okay, so in terms of individual names, the first stock on my list is Angel One. That's been buzzing in trade today, but there is a strong indication in the market that maybe you'll see a large block in Angel One very soon. So that's the trigger there. So that's something to track. The second stock is VIP Industries. This is interesting. The stock has recovered in today's market of 4-5%, but it's still trading below the open of a price of 388, and it has seen a one-way correction for all the high from 450, 460, all the way to 350 in yesterday's trading session. A bit of a pullback in today's market, but I understand even in VIP Industries there could be some corporate development, a potential 6-7% block. I guess is still pending, and that may happen very soon. So that's the trigger there. The third couple of stocks, basically OMCs are seeing a bit of a buying interest today. After what we saw yesterday, a bit of shorting on a brokerage downgrade, some bit of small buy flows as well as covering as well in HPCL as well as in IOC in today's market. And the last is Ashok Leyland. Against the trend, while the stock has seen a bit of momentum of late, there is aggressive selling from a larger FI in Ashok Leyland today. So the volumes would be on the higher side, and maybe on the sell side. So watch out for the delivery volumes towards the end in Ashok Leyland as well.
Nimesh, on VIP, right? Corporate development soon, right?
So, Prashant, as I said, there is a strong indication that maybe there is one more block left where the promoted entities will sell, and the funds who bought, including multiples and couple of HNIs who participated and who have done an open offer as well. So they may buy as. That's the buzz as far as VIP is concerned. Also, the fact that this was a kind of a kitchen sinking quarter for VIP. From here on, how the numbers pan out and whether they appoint a new CEO, that is something to track as far as VIP is concerned going forward.
Yeah, no, absolutely. It's an interesting one. So Angel, VIP, the oil marketing companies, and Ashok Leyland are the 5 stocks on Nimesh's chatter list. 65 points away from a new all-time high. Time for a quick commercial break. But before that, I think Mitesh is with us for a quick trading idea. Mitesh, what do you have?
Yeah. On the stock side, MFSL is looking good. It's closing at the day's high. So PTST here will stop at 17.26, targets of 17.50, 55. And the other one which I like is Multi. Auto has been going through some consolidation but picking up space again. So Bajaj Auto was called earlier. Multi is a VTST with a stop at 16,100 just below it, and a target of 16,225 to 40 on the upside.
Okay, all right. Thank you very much, Amitesh. We'll leave you to enjoy the rest of your day, and we'll see you with the market again tomorrow morning. For the time being, let's welcome Mayuresh Joshi into the conversation. And Mayuresh is joining us on a bright green afternoon. Mayuresh, the market's moving from strength to strength. Let's see, last time, I think it was somewhere early last week when we were teasing and testing around these all-time high levels. We came barely 35 points away from it. So I don't know, now we're 74 points away from it. So we'll see. But tell us, Mayuresh, give us some new stocks at all-time highs. New ideas.
Afternoon, Surabhi. I think the flavor is green. I'm wearing green. So I think there is optimism around the corner, around the street as well. No, I think from a new stock addition perspective, what we've recently added at MarketSmith India is the online portal TBO Tech. Again, I think our thesis here has been considering very strong rating rankings that the company has been posting, very strong set of top line numbers. EBITDA margins have been very, very strong for TBO Tech as well. And we are entering into the best season as far as travel, tourism, and hospitality is concerned. Considering their platform itself, more than 12,000 transacting agents on a monthly basis. And therefore, I think if one really assumes a large part of their contribution coming in from Europe, a large part of their contribution coming in from the Middle East, and spread across US, Latin America, and the rest of Asia. I think there is significant amount of business strength that comes through. Arguably, I think the entire perspective in terms of better numbers going ahead and sustainability of numbers is something that we believe TBO Tech can probably keep on posting. So I think very strong rating ranking institutional holding as per Cancelim on what makes us very, very optimistic on this counter. The second one that we continue liking from the Rodal space is VST Tillers, stroke Caraco India as well. So both these companies have a distinctive feature in terms of the agri exposure that they've probably got. The tiller and feeder sales have been exceptionally good for VST Tillers year to date. Tractor sales are a tad bit sluggish, but the expectations is second half, it should be relatively better. The utilization levels, both for tillers, feeders, as well as tractors, are absolutely at manageable levels. And therefore, I think additional capex might not be required for some length of time, giving the boost in terms of stronger cash flows that might continue onto their balance sheet. As a proxy to VST Tillers, Carero India, I think it's looking exceptionally strong as well. Again, supplies equipments in terms of axle gears to both the 40 HP and higher tractors as well. And the entire axle, the tractor axle industry itself is transiting from 2WD to 4WD, which is very, very beneficial for Carero India. And therefore, I think both the construction equipment segment, the expectations in terms of the tractor segment doing well, both domestically as well as globally as well in terms of their client reach, seems to make a base case scenario that domestic operations had been a little bit softer for both tractors and construction equipment, but should come back very, very strongly. Again, very, very strong balance sheet dynamics and very, very strong rating rankings as we see in markets. So a few recent stocks that we've added to our model.
Stay on, Mayuresh. Just want to get a quick handle on how the December series has started. Nigel has moved over to the F&O desk. Nigel?
Well, as I said earlier this morning, the December series has started off actually with the open interest at the lower end. You know, if you compare it to the start of other series, it's much, much lower. So we're light at the start of the series, which helps you in terms of a bigger move on either direction. And in today's trading session, you know, what's clear is the 20-day MA, that's the first reference point that you want to look at. The 25,800 mark is crucial to defend on the downside. And the range, if you look at it, 25,500, 25,800, till that's defended, you'll say that the bulls, you know, they have some unfinished business at higher levels. The Nifty Bank is the one that's leading the way. It's up 700 points. And today's a trend day. The Nifty Bank, it's a trend day. You bought at any point of time, you would be making money. And that's precisely what you're seeing on the screen. The problem is now the PCR is moving to the upper end of the range. And, you know, when I send these graphics, it was at around 1.45. The last time I checked, it's at around 1.5 or thereabouts. So 1.6, 1.65 is when we see some kind of topping out of the PCR. So just keep an eye out on that particular factor. The reason that the PCR has moved up is because at the start of today, 25,900 put was active. Then we had the 26,000 put. Then we had the 26,100 put. So put writing is very, very aggressive. And the premiums have crashed on all those strikes. Individual stocks that are in focus, Jio Financial, you know, I think that's a stock you really need to track. It's moving with good amount of momentum. The big boy Reliance Industries is moving up. Jio Financial derives a lot of its value from Reliance Industries, and that's clearly come in for a bit of a short covering bounce. A stock like RVNL as well, that's been quite volatile, that as well as seeing a bit of a bounce in today's trading session. And in terms of fresh buying, Saman Capital, now that's moving very, very well today. There's a massive open interest built up out there. So keep an eye out on that one. Fresh buying being seen out there. And also we have MCX that's seeing some fresh buying out there. So it's a good trading session. The bulls will like the start that they've seen to the December series. And the most heartening aspect is the breadth of the market. Number of stocks advancing to the number of stocks declining, 3:1. Good day for the bulls. Back to you guys.
Indeed, 2,200 stocks currently in the green and so many individual names. SMS Pharma, earlier Hormus was telling us the kind of volumes, 18% up. Natco Pharma, 11% gain on that. Fino Payments Bank, it's a 10% surge. You go down the list, very large volumes for Pesalo, Digital, Hoodco, Varun Beverages, a very green looking screen. Get into a break, we'll come back with the closing rates.
Welcome back. Bombastic trading session. Things looking very, very good. But Mayuresh Joshi is still with us. Mayuresh, I want to ask you about Saman Capital. Now, the stock has come down from the recent high of 190 to around 150 odd. And there's clear signs of fresh buying out here. If there's no problem with regard to that deal coming in from the Middle East, the money that's coming in there, more than $1 billion, then this could be a good entry point. Would you take the risk? Or do you think that the cases on the erstwhile promoter and the question marks on the erstwhile promoter could actually impact the business going ahead? You'd rather stay on the sidelines?
Nigel, again, afternoon to you as well. I think it's a catch-22 situation. I think if nothing comes out and the stock moves significantly higher, I think in hindsight, it might be a good buy. But again, I think there is an overhang onto the stock. And therefore, I think it's always better to wait for clarity to probably come through. Once we get sufficient amount of clarity in terms of what is expected to happen, the other triggers are already existing for the stock, which might actually propel the balance sheet on the higher side. Therefore, we prefer to be on the sidelines to understand and await what kind of news flow probably comes through. It's a risk if nothing untoward comes through. But again, I think it's worth taking that risk because if something comes up which is not favorable as the street believes, it might turn out to be worse than what we probably are at the current juncture.
Mayuresh, there's some amount of uncertainty on the kind of refining margins for Chennai Petro and MRPL going ahead. So you're seeing profit booking after a strong run-up. Chennai Petro looks like it's going to end with a double-digit cut. Where do you stand on these two stocks?
So, Rima, again, I think it really depends in terms of how the crude movement probably remains. And therefore, I think with Singapore GRMs, which are around $9 at this juncture, if they're able to sustain quite significantly at these levels, there might be some respite that probably comes through. Now, in the quarter gone by for Chennai Petro, if you've probably seen, volume throughput was relatively better. In fact, the distillate yield for Chennai Petro was 80%, which clearly indicates that the Singapore GRMs and the refining margins played out, the cost efficiencies probably played out, and with better distillate yields that probably played out, numbers were relatively better. So it's an if and but scenario. Therefore, I think one really needs to wait and watch on how GRMs will play through, how the throughput will probably happen, and what probably happens, whether they're able to maintain that distillate yield higher percentage, which gives them that greater chances in terms of sustainability of profitability going ahead.
I guess clearer in that sense for the oil marketing companies, which have refining but also have marketing, right? And of course, oil prices coming off kind of does benefit. And they've not had the kind of rallies that some of the standalone refiners have had. Clearly not. This company, Capillary, have you looked at it? The new listing?
No, Prashant. Sorry, apologies. Not right then.
Okay, all right. What else? I mean, I think M&M Finance is taking a bit of a knock. It's down about 3%. Had a bit of a move after the investor day at Mahindra & Mahindra. Went up from about 320 to 350. Actually, it went up to about 360. And today it is coming off. MTAR Tech is one of those massive movers. 2 months back, stock was 1,400. In 2 months flat, from 1,400 moved up to about 2,700. And it's giving back some of those gains. Yatra, of course, I mean, news-related name. And we saw a very large move. We spoke with the management yesterday. The management clarified stocks saw a reversal. Today it's down about 4% as we speak. Stylum Industries is another one where there is a deal afoot, as we've reported. It was up some 7-8% yesterday and it's down 6% today. So back to about 2,050. I think we reported deal should be between 2,150 to 2,250. If I remember correctly. What we pick up is that it's around the corner. So that's that. At least on the way down, this is what is going on. Natco, do you have a view? Mayuresh, do you track it?
Yes.
Natco Pharma?
Yes. Yeah. And again, I think the expectation largely here is that it should have a sustainable earnings growth going forward. I think the kind of applications that it probably has, both pending and due for registrations, I think that creates a very good pipeline for Natco Pharma. And again, I think the R&D expenditure, it's not just for Natco, but for the other pharma players as well, are now on a sustainable track, which means overall EBITDA margins should be far more sustainable going forward. Any resolutions that we're probably getting on the Trump part, specifically when it comes to the developed market, obviously aids. Anybody holding that, we should continue.
All right, just a few seconds to go before we wrap. And what a trade it's been. The Nifty is ending at 26,200. The countdown to all-time high is on. It's a gain of 1.25% coming in on the benchmark indices. Sensex has skyrocketed 1,000 points and ending above 85,600. Mid-caps moving in step. Nifty Bank up 700 points. The bell has gone with the advanced decline ratio firmly in favor of the gaining side. Nearly 2,200 stocks in the green. And many of these heavyweights, Reliance Industries on the way up. Metals were shining in trade. Interglobe Aviation had a strong up move. NBFCs, Bajaj Finserv, Finance, Geo Financial, and look at HDFC Life. That too, up and about in trade.
You know, you just cannot complain with today's day at all. Sectorally, every single sector is in positive territory. The least performing sector is FMCG, which is also up about 0.75%. So it's that strong a day. And of course, metals have led from the front. On the mid-cap screens, there's plenty of cheer. Look at some of these names. JK Cement, 6%. Tata Investments, 5.5%. PG Electroplast, 6.5%. GMDC, of course, we've already discussed on the rare earth excitement. Natco Pharma, rate gain, 5%. So many names up and about. Raymond Realty, I could just go on, but short point is it's been a very well-rounded day. Lots of momentum. It's been a very broad-based move, and the bulls will ask that question that this time, have they indeed taken out this congestion zone of 26,100 to 150 decisively? I think we'll have more clarity and answers tomorrow. But for now, a fantastic Wednesday comes to a close. Well, with that, the team of Closing Bell will take your leave, but don't go anywhere because all the market action continues. Up next is Markets Forward.